What's going on? What's going on, everybody? It is your boy AB. Thank you for checking out another one of my trading videos. So today what I'm doing is I'm back testing, but I'm also showing like not exactly what goes on in my mind, but basically what my psychology is and what I'm thinking about when I'm getting into these trades, right? So first and foremost, I have a couple of rules that I always apply to myself. Number one rule that I look for in a trade, especially when I look for a trade setup, it must be a 1 to 2 risk to reward or better, unless I'm scalping. If I'm scalping, it's a different story. But if I am getting into an intraday trade, a swing trade, a day trade, whatever type of trade, if the risk to reward is not a 1 to 2, I'm not taking that trade. That's just me personally. People die for 1 to 1 trade setups. That's totally fine. It's up to them. That's not what I like though, right? So that's number one. Number two, I can't risk any more than 2% of my account on one single trade setup, right? So I can't, and usually I don't even think of looking at taking 2% for one single trade. But it just depends on the quality type of trade that I'm looking for. And if I am in profit by a good margin, then okay, I might think about risking a little more and risking the money that I've already attained, not the money that I haven't made yet. Like let's just say, for instance, that I made $500 and I'm up. Like let's just say I'm up 5% for a week or something like that. Like I'm going with $10,000 as the capital size example, and I'm up $500. I'll be down to risk instead of $100, which will be 1% of my initial capital. Instead of risking $100, I'll go ahead and risk $200 on a trade because I've already made that money. And now, if it's a setup that I like a lot, I'll risk 2% on that one single trade, right? So that's what I would be looking for number two. Number three, I can't buy at a resistance, and I can't sell at a support unless arbitrage verified my move. Now, for those who've been with me for a while now, and even for those who are new here, I use arbitrage as an indicator that if you haven't seen it yet, you'll be seeing very shortly when I do my back testing. Um, but yeah, it is an indicator that I use to tell me basically when to buy, when to sell, when to get out of a trade, and when to, like, when I can stay in the trade and all that stuff. It's just extra confluence. But I do mainly trade with market structure, price action, and all that stuff, right? So, number four, risky moves. I can only risk a maximum of 0.05% of my account. So if there will be times where you'll see it's I'll be getting into risky moves, and they might end up going backwards on me. I can only risk 0.05% of my account on those risky moves, right? So if, like, again, let's use the example of $10,000 account. If I have a $10,000 account and I'm risking 0.05% of my account, that means I'm risking $50 on one trade maximum. Some other moves I'll probably risk, like, let's say 0.03, 0.02, but I have a max of 0.05%. Because even if, let's say, if I get a risk to reward of 1 to 3, and I'm risking 0.05% of my account, if my trade goes, it hits my TP, and let's just say I'm not taking any partials, then I've already gained 1.5% of my account, which is $150. So I was risking $50, but I'm gaining $150, right? So that's number four. Number five, if in one day I lose more than 4% of my account, the next 2 days I can only risk 2% of my account until I bounce back, until I get back the money that I've made. So if let's say on Monday, I lose 4% of my account, just like on that single day, right? Then the next day, I can only risk 200. If I lose 200, I can't trade until the next day, and then I could only lose 200 on that day again. And then on Friday, it even gets, if I lose those 2 days, that's crazy, and that would be insane for me to have a losing streak 3 days in a row. But it is possible. That's why you have to set up rules. If you don't set up your rules, then you won't be able to be really good at. Um, hold on, let me mute everybody. Then I won't be if I go and have a losing streak of 3 days in a row, which is possible, but it's really not for me because I have an indicator that helps me get in and get out of trade, so I don't even have to risk a full amount that I'm looking to risk, then it just I have to decrease how much I'm risking per day as I go along. If I lose 4% one day, then I'm gonna stop trading. Then 2% the next day, I'm gonna stop trading. 2% the next day. If I lose 2% back to back as well as that 4%, then the day after that, I'm only risking 1% of my account, and then so on and so forth. Because like I mentioned, if I'm on a losing streak, then it makes no sense for me to keep losing the same amount that I've lost on that first day from the losing streak. If I'm on a losing streak, I'm gonna literally decrease how much I'm risking per trade and look for better setups. Like if I lost a 1 to 2 with 4% of my account, then I'm gonna go back and then I'm gonna be like, okay, now I'm gonna risk 2% for this whole day, whether I'm taking 5 trades, 10 days, 15 trades, whatever. I'm gonna only risk 2% of my account here. And then I'm going to be looking for, instead of 1 to 2s, I'm going to be looking for 1 to 3s or 1 to 4s, right? Then same thing with the next day. I'm only going to look for better opportunities as I'm going along with my losing streak so that I have a better chance of winning. And again, I have arbitrage, which is my edge in the market. If you have an edge that makes you be a little bit more aggressive or be a little bit more risky than other traders, then you can utilize that to your best knowledge. But if you don't set rules in place, you're gonna blow your account every single time because it makes no sense. Like, why would, okay, let's just put this to perspective. And I say, and I'm pretty sure I've said this multiple times. Why would you want to go and, let's say if I have a $50,000 account, right? Then I see a signal that's posted up, and the signal has a stop loss of 50 pips, and then your take profit is 150 pips. All right, cool. Every single trade has the opportunity to lose. Every single trade that I place. That's what goes on in my head. Every single trade that I place has the opportunity to lose. But your main focus is to make sure that you protect your capital, and then you have to, in order for you to gain, you have to risk. So you have to use your capital that you have and make sure that no matter how many trades you're taking per day, whether if it's 5, 10, 15, 100, make sure that it's still in guidelines to how much you're risking in your account or how much you're risking with your capital. Because if you're taking 2 trades and then those 2 trades equals 50% of your account, and you have a $50,000 account, that means you're risking $25,000 in just 2 trades. That doesn't make sense to me. Now, if you have a small size account, or even if you have the money that you can waste and you don't care about $50,000, then by all means go ahead. But if you're a trader like me, who like, this is actually how I make my money and how I actually like pay my bills and stuff like that, and I'm not even using my own personal capital right now. I'm strictly only trading on funds that I'm getting from, like let's say FTMO, or there's another challenge that I'm trying to get funded by a different company. Like, I'm only getting funded by these companies so that I could trade with a large amount of capital rather than me trying to trade with a $1,000 account or a $2,000 account or a $3,000 account. Not saying that it's not possible to trade with those, but 10% of $2,000, 10% of $2,000 is $200. I'm not gonna be trying to get 10% in 1 month and just make $200 in 1 month. That's not what I'm trying to get. I'm trying to be able to have trading be worth my time, and also be risking a fairly good amount of money, because guess how much of $100,000, $100,000, 10% of that is, and I'll even pull it up right here. I'm not sure if it's gonna pop up. I'm pretty sure it's not, because my I'm only sharing the browser and not the rest of the computer. But I'm just gonna do, oops, I've opened 2 of those. $100,000. Then you multiply that, and I'll even post it up on TradingView, and then it's 10%. That's $10,000. So if you're looking for, that's why I'm saying that like rather than trying to trade with a small size account, like a $2,000 account, and look for 10% of that, which is only $200, why not just go get funded by a trading company that will pay you to trade with their capital, and then go aim for 10% with that account size. You're doing the exact same thing, just different lot sizes, exact same thing, and then you could be able to get 10%, and it's $10,000 rather than $200. $10,000 is way worth my time for one single month rather than $200 on a small account. And if I'm following my rules and being disciplined, it's even better because I'm not stressing about it. You get what I'm saying? So let me even type that down right here. $10,000 or $100,000 times 10%, that equals 10 grand right there. That's off of a 10% increase of capital that's not even mine, that I don't have to worry about, oh, if I lose it, because a company's only going to fund you with their capital if they trust you with their capital. That's the only way that's going to happen. There's no other way to it. Let's say, for instance, you have a $50,000 account. You have a $50,000 account, and then you increase that by 10%. That's $5,000. $5,000 is way worth my time and my effort that I'm putting into these charts, way worth my time, rather than if I have a $5,000 account and I'm trying to get 10% of it, which is $500. Because $500 only pays like one of my bills. Realistically speaking, it only pays like one or two of my bills. So $500, that's not going to do me anything. And if I'm going to be a professional trader, which I am, and I'm spending all or most of my time on my computer trading, then I'm not going to go and try to get $500 in 1 month. That's why people blow their accounts, though, because they have a $5,000 account and then they go and trade. They're trading like 10%, 15%, 20% of their capital off of one single trade. When if you can just go and learn how to set rules for yourself and be disciplined, and even if you, like I said, even if you're taking 1, 2, 10, 15, 20 trades or 100 trades per day, as long as you're staying in your guidelines, then it doesn't matter. That's just how I see it. That's how I personally see it. Because guess what? On my FTMO account that I have right now, I'm gonna be sharing those results, just so that there's more transparency. You guys will see how many trades that I take. There's a whole bunch of trades that I take, but guess what? That's because when you're taking partials off of trades, that's one single trade. When you're exiting out of a trade real quick just because you don't like the position, that's another trade and stuff like that. So don't worry about the number of trades that you're taking, because that shouldn't even matter. What should matter though is how much percentage. This is what matters. This right here is what matters to me. To me personally. Some people will be like, oh, don't overtrade, yada, yada. It's not overtrading if you have a system that you're using and utilizing and you're still maintaining the criteria of what you're trading. Because like I said, if I lose 4% of my account in one single day, I'm done. I'm not trading at all. I don't care how like if I see the most beautiful setup and I know that it's going to go 500 pips or whatever. If I lose more than 4% or 4.5%, I'm not trading at all. That's just it. And then after that, the next days I only risk 2% of my account. And then if I lose those two previous next days, then I'm only gonna risk 1% of my account after that. And then if I lose that 1% that same day, that's how much I'm gonna shorten my risk, but only look for greater risk to reward setup so that I can make the money back that I just lost. And then I can start looking for profits, So that's number 5. And then number 6, most important rule: every trade you place, know how much you are going to lose. Use a risk calculator always. Reason why? Guess what? like I mentioned earlier, I know that every single trade that I am putting in has the risk to lose. That's my number, that already in my head. I already know that. Even if it's the most beautiful setup, it's my beautiful 78.6. Oh yeah, yes, that all that stuff. I know that that still has a chance of losing. Because again, these markets, people think that the markets are against them or is for them or whatever like that. The market is neutral. The market itself is neutral. The people who are in the market, banks, prop firms, corporate firms, different companies, they're the ones that make the market move. The market itself has no emotions and is not against anybody. It's literally people who are buying are trying to take money from away from those who are selling, and vice versa. The market has no emotions. We, the people that are trading in them, we're the ones that have the emotions. So if you have a setup, if you have a set system that you're working with, and you know how your system works, and then you can still work in those parameters, like I said, if you take 1, 10, 15, 20, 100 trades, it doesn't really matter. What matters is if you're able to, if your mindset is able to hold that and you're still working in your parameters. That's what matters, right? So this is just a little something that I wanted to show to you guys before I get into this. I'm pretty sure for those who know and see me trade, I don't trade AUD CAD ever. So that's what I'm going to be going and back testing today, right? AUD CAD. Because again, I want to be showing trades that I have, or a pair that I don't ever trade. I'm going to go ahead and just find this random area. Let's see, random spot. Let's go over here. Okay, gonna do a markup. Let's go on the daily time frame. I'm just gonna hide this. 1 second, I'm gonna pause this sharing real quick. All right, so let's look at AUD CAD, right? So first and foremost, I want to make sure that if on the other side, if it's doing the same thing as this side over here. No, it's not, because this is still in current time. I wanted it to be the same time. So this is May 20th or May 14th, 2020. Because I want to have both arbitrage and the indicator and this right here so that you guys can see exactly how I trade with it. So that's May 14th again. Put this down. See. Oh, this is March. I'm tripping. That's funny. Okay. May 14th on this side. Cool. All right. So what I'm looking at, I'm seeing that price is currently made this bullish move to the upside, right? And it's currently sitting at this resistance, and I'll go check on the weekly time frame real quick and see where it's at. So it's came from this structure right here. Oops, there you go. It came back to the structure that it was once respecting, right? It once came up here at one point in time, rejected, came over here, rejected it another couple of times, and now it's currently sitting right there. It's definitely still in a downtrend, I would say, because from it came from up here and it's been in this slope, and I'll just draw a trend line just so that we can see what that looks like. We have this trend line right here that's set up 1, 2. So price would need to come up here to make a third hit on that trend line. So that's not something that I'm going to be so paying attention to. And then we see these bullish, really bullish candles, and price has just been bullish for the past 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. So I see 9 weeks of bullish move to the upside. Go back to the daily time frame, and I'm seeing that prices came and looks like it's made a double top on the daily time frame, right? So we have this double top right here. Now I'm looking for price to, if it's gonna respect this daily hold right here, I'm expecting it to look at this double top and then be like, okay, I'm gonna shoot down, retest, where I just broke from and then continue to the downside. Because what this has to do for it to be considered is going into a downtrend, it has to still break this structure down here on the daily time frame, right? So just gonna have that there. Then also have this little support right there. Okay, going to the 4-hour time frame. And again, price is in an uptrend for sure. On the daily time frame, on the 4-hour, it looks like it's just been playing in the range right here. But I'm paying attention to the daily more of. So let's see how that plays out. If let's go back to the daily real quick. I'm gonna fib this. If I'm looking for some type of retracement on this move here, is I want to see that. Hell no, I'm not looking at that time frame. I want to see price realistically come back down. Oh wow, I didn't even know I was that nice with it. No, I'm joking. But I want price to come down and come to this buy box before I can buy. You get me? I could only buy if I can't buy at a resistance right here. Although yes, I do see that this price is in an uptrend. I can't buy at this position right here. So I'm gonna go for this right here. Gonna change this to my sell box. Right? And then boom. So this is what I'm looking for. I got the double top. If price respects here, I'm looking for price to jump down, break this support right here so that it's on the small time frame, considered to be in a downtrend, and then retest it, then continue to the downside. So now I'm gonna go to arbitrage and then see what arbitrage looks like. And so on the daily time frame is daily, but it's been, like I said, wicking over there. Go to the 4-hour time frame. It looks like it's respecting this RSI line right here for a little bit. Let's go to the 1-hour time frame. All right, so the 1 hour is called for this sell right here, and it looks like it's retesting this this RSI line right here. For me personally, although this is already played out, I would have tried to get into this trade just because I'm looking for a risky sell, and then I would put it slightly above this lower danger zone. This upper danger zone. And if you don't know what I'm talking about, you can go to my my YouTube page and check out arbitrage and me dissecting it, because I explain all of these in detail. Then you could also click in that link to find the arbitrage YouTube page. And so if it was me, I would look for price when it came up here. I would get an enter right there using this indicator right here, right? Then also go to the 15-minute time frame just to make sure it hasn't called for any sell or anything, right? So let's just say, for instance, that I'll get an entry right there. I'm gonna copy this, place it on over here, paste risk reward short, have to go all the way to the 15-minute time frame. And so this, like I mentioned, this would have been where I would have wanted to enter. But since I wouldn't be able to get that, I'd most likely be getting in where this candle is sitting at right now. But I would have initially wanted to have gone in up right here because it called for the sell. I wanted the retest of the RSI line, and it came up over here, respected it, and then dropped. So with that being said, let's go into the 1 hour time frame one more time. Yeah, so I'd put my stop loss up right there. And then let me go back to regular charts. And I'd be looking for this sell right here. This is an opportunity that I could find on the 15-minute time frame and live with for sure, right? Because fortunately, I already know how that other side is going to play out a little bit. So I'm just going to go ahead and fast forward this to match the time of this last candle, which was at 12. Yeah, 12 midnight. Okay. So go ahead, fast forward a little bit. ended up selling, missed my stop loss by very little. Let's go. I mean, well, not let's go, but I like that. Never called for the exit. Because sometimes I won't even place a stop loss. If I get the exit alert, then I'll just be like, okay, that's when I'm exiting. But that's never safe. So don't look at this trade. I'm talking about on the other side. But so this move happened, came here. I would have taken my partials. Let's go to the 4-hour time frame. 4-hour time frame called for that sell. It kept selling. I like that. Again, prices over here. I'm using this as a support because if I go onto this side, what time is this at? 8 o'clock. This is at 12. Let's see what this side does. Okay. So this is at 8 right here. So again, I would have taken partials right here because that's where I see a support. And you can see over here as well, this is where price had once came to as well. My stop loss obviously would be at break even because I was only risking 19 pips. Once I get a trade that gets me something that looks like it's already done my 19 pips I was looking for, right here, I'm putting my stop loss at break even and I'm taking 30% of my trade. So, and let me actually go ahead and back up a little bit. I'm gonna rewind and show what I mean. So let's just say on this 15-minute move right here, or there's not really a 15-minute move, it's more like a 4-hour move. It just looks like a 15-minute. So I'm risking 20 pips, and then I'm looking to get 73 pips. This is a risky move because this wouldn't be a move that I would just trust my analysis and then be like, oh, I'm gonna sell right here. I'm using arbitrage for my entries, right? And so if I would have got in at this point right here, not at this wick that I really wanted to get into, then I would be like, okay, like I said, 19 pips I'm risking. I almost lost those pips, but then price never got up there. And let's go see how that looks on arbitrage one more time. Because I want people to get used to me using this indicator rather than being confused with it. So you see this wick? It almost shot up where I put my stop loss at, which was a little higher than this upper danger zone. Because again, I use this as a support and I use this as a resistance, no matter what time frame it is. So we have that. I'm taking 30% profits off of this trade. So for instance, let's just say now I'm just going to use like a standard lot size. Let's say that I'm risking, oh wait, that's a vertical one, sorry. So since this is a risky trade and it has nothing to do with my Fibonacci setups that I usually look for, and it's more for arbitrage, I'm only risking about 0.03% on this account, right? And I'm using a standard lot size, one lot. And let's say that my capital is $50,000, right? Let's see. This is what I have predetermined in my head. But now let's go on to my fxbook.com. Oh, I could have just pressed the risk calculator. It was right there. It's all right though. Where is it? Forex calculators. There we go. All right. This is definitely the wrong one that I wanted. Position size calculator. Okay, so account size US dollar, account size $50,000. All right, risk to reward ratio percentage. So I'm looking at risking 0.03%, right? And then my stop loss is, I'm just gonna put 20 pips, but it was like 19.3. And contract size, this is just a regular contract size for most forex pairs. And then the currency, AUD CAD. I thought it was supposed to be 0.03. Hold on. Let me see. Switch to money. Swap with risk. Let's see. So with the $50,000 account, I'm risking $1,500, and then I can use a 9.851 lot size. This is why I don't personally like looking at the computer for my risk to reward ratios, because I'm way more used to it on my phone. So let me just make sure that's correct. Okay. So go to calculators, same exact thing, $50,000. Stop loss 20 pips, risk by percentage, 0.03. Stop loss, and then AUD CAD is the pair that I'm looking at. Calculate. Yeah, that is what I'm saying. That didn't sound right. So definitely, we're trying. My phone's tripping. Hold on. 50,000, 20 pips, 0.3, and then 50,000. I was muted this whole time. That's upsetting to know that I was muted this whole time. I don't even know how much of that was gone or how much of it was muted. I don't know why it didn't tell me I was muted. Maybe from the time that I got up in here. So I'm just gonna have to re-explain all that. You see, I didn't even know that. Sorry, guys. But anyways, right here where I started the trade, I was risking 0.03% of my account, and my lot size was a standard lot, and my account size was $50,000, right? And I was risking 3%, which was $150. That's how much I was risking, right? Come to the position calculator because I always have to use the position calculator every trade that I get into. So I was risking $150, 20 pip stop loss move. The contract size is that's what this usually is. It's usually 100,000 for the contract size for forex pairs. Currency pairs AUD CAD and US dollar account size 50,000. And then so it shows you the risk to reward ratio, which is or the percentage that you're risking. It's 30% or 0.3%, and the lot size is 0.985. So I'll round that up to a 1 since it's very close to 1. I'm like, I'll just say that it's a standard lot, right? So then once you go back, once my trade, I was risking 20%, and that this is what this box represents. Once my trade goes 20, does that 20 pips that I was risking, I'm moving my stop loss to break even. And so once my stop loss is at break even, I'm taking 30% of whatever I'm taking 30% profits from that trade. So from right here, 30% of a standard lot size at 20 pips. 20 pips on the standard is $200. Once I'm taking 30% of that $200, it becomes $45, and then I'll be looking to take another partial profits once my trade goes 2% into profit from what I was risking. So once it gets into 2%, then I'm taking another 40%. So that means I've taken a full 70% pips. I've taken a full 70% of my profits from this trade. And so that would then turn that 0.70 into a 0.30. And my profits that I've made is $101. Because if you do this math right here, let's just say that not even, let's just say this is 20 from here to here is 20 pips, right? That's a 20 pip move. 20 pips you take if you do my bad, I lost my train of thought for a second. If you do the math for this 20 pip move, let's just do it, and then I'm taking 30% off of a standard lot. So 200 times 30%. Oh, my bad. I even made a mistake. This is supposed to be $60, you see? And this is why sometimes it's easier when it's on when it's on MT4 because it does all the math for you. But yeah, so it's $50,000 and $60, $50,000 and $60, and that obviously does not include swap fees if you have any, commission fees if you have to pay any, and spreads, the differential of the swap. So it's just a example number that I'm using, right? So so you've made $60 off of a 20 pip move off of the standard, taking only 0.30 of it, right? So then you look for another 2%. Once your trade goes another 2% down to over here, then your trade is risk free. You've taken 70% of your profits. So instead of that being a 0.70, now it's a 0.30 because you've taken 0.40 of the trade. First you take 30%, then you take 70%. So that's 70% right there, right? Then what you do after that is you'll go ahead and figure out, okay, so a 0.70 from here to here, that's another 20 pips. Hey Beth, I'm live right now. All right, so then again, so now that we have this, we're measuring how much is 0.70 on 20 pip on, well, first of all, you have to think about it that you're getting it from here all the way down here. That's 40 pips on a 0.70. So a 0.70, that means that for every 1 pip that moves, that's $7. And then you have it at 40 pips. So you do $7 times 40, and that's $280 that is made from this whole move, right? Now that's $280, and you're taking 40% of that 280. So that means that you're taking 280 times 40%. That's $112 that you made. So you add that on top of this $60. So that means that now it's 112 plus $50,060. That means you've made 50,172, and that's why sometimes doing stuff over, you'll be able to get the math right. And you've taken 70% of your profits, and right now the rest of the trade that's running is 30%. Price didn't even come all the way down here though. But if I see, if I'm visibly seeing, and this is how I'm looking at it in a trade again, if I'm physically seeing that price is close to TP, like 3 or 4 pips, like this, 7 pips, whatever. If price is close to here, then I'm okay with taking that 70 profits right here and be like, it is what it is, because price came 4 pips away from there. Oh well, it is what it is. I'm not gonna be super picky and like, oh, I need that to hit right there. No, just take your profits right there. You're not in the market to have it hit smack daddy before you take your money. Just take your money when you can. You could take it at any time. It's money that you've made. It's money that you were risking already, right? And so let's even go and see what arbitrage looks like. So this is at I can't see because this is in the way. This is at what time? At 9:30. Let's go see what arbitrage looks like on the 15-minute at 9:30. Hey baby, how you doing? And so we have prices at this support. Again, if I'm seeing that price is 4 pips away from my TP, and especially with the 1 hour looking like this, it's showing that it's at the 2 deviations and it's showing that it's oversold like this, I'm taking my profits. So I've taken, and again, now let's just go back and see, like I was talking about percentage wise, right? This is only one single trade, and I've made $172. Well, not 172 exactly. It'd probably be like 140 or something like that. But I've made $140 off of that with the $50,000 account size, only risking 0.03% of my account. That's a good trade to me. That's a really good trade to me. And again, I use arbitrage to help with my confluence for me to be able to get into trades. And that's why I'm always able to get into trades at any given, well, not any given time, but when I see fit, you know, because it's giving me this move. I'm up. I think I'm up like what point 60 something percent of my account, which is totally awesome. I'm made almost double from what I was risking. Well, no, I've made the amount that I was risking from the beginning, and this trade is a risk-free trade no matter what. So it's a win-win-win-win. That's how it goes in my head, though. That's how it was going in my head when I'm viewing these trades and stuff like that. Not everybody has the advantage I do that of having arbitrage. Not everybody has the advantage of knowing what their system or having a system that works for them. And so that's why you got to practice and work hard towards that, right? Because now what I'm looking at is, okay, arbitrage, 4 hour time frame, this came to this lower danger zone. It could, if it just respects here, then I'm just gonna go ahead and take all my profits, because that's probably what's gonna is this is probably is not gonna keep going any lower. 15-minute time frame. Oh, it's still calling for the sell. So I'm gonna stay in the trade. Nothing's told me to get out of the trade just yet. So let's go back, because this is at what? This is at 10:45. So let's match up the times. So right now price is at 9:15. Let's go ahead and 1, 2, 3, 4, 5. Right here, this I'm pretty sure this is at 10:15, 10:45 right here. Boom. So look, at 10:45, our TP would have even got hit regardless. So But that's just like I said. That's just me. If I'm looking at the trade at that time, which is it's at 7 or like between 7 o'clock. So most likely I am gonna be at my computer trading. Then I'm probably gonna take my profits here. But your profit got hit right here, regardless. See. So now let's keep going. Let's keep rolling with it. Okay, price is consolidating. Once, like right here, look at 130. Once I see that price is consolidating like this, I'm gonna go and look at arbitrage and see what it's saying. So that was at 130, right? Let's go ahead and move forward. Right here. I can see a move like this setting up, because this is what I like to see. When the RSI line is down in this pocket right here, I could see a move setting up, and then I'll be like, okay, if I get that bullish move, like how we have right there, and then I get a retest of this RSI line, then I might go ahead and get out of this trade and call it a day from this one single trade, right? So this is at 2 o'clock, this candle. This candle is at 2:30. So let's see what happens. So I don't even get that retest. I don't even get it at all. The price just ends up going higher. So this is at 2:30. All right. My stop loss is still at break even because I'm like, I didn't get that retest. So price just kept going up. I'm like, okay, most likely price is going to end up keep dropping. Then if I go to the 1 hour time frame and see all this, then I'm like, okay, I'm just going to go ahead and stay in the trade still because nothing's really telling me to get out quite yet. Although I did know that once price was at this lower danger zone, the 4 hour, that it could potentially pop back up to come back and retest this RSI line. I've already made money off of this move though, because so whatever happens, I'm not tripping. I'm not really crazy over like, oh, my stop loss is going to go get hit at break even. I'm okay because I've already made money off of the move. Every single trade that I get into, my sole motive is to protect my capital and to make money, whether if it's $5, $10, or $100. That's just it. That's how I look at it personally, right? And then so continue on. Let's just see what happens, because arbitrage at this point, let's see, at 9:40, at 8 o'clock, sorry, or at 10 o'clock, that's what 2200 is. Let's go see what it's looking like on the 1 hour at 2200. See, now it's giving all these signals right here because it's just consolidating. That's what happens when price consolidates a lot, right? Now I'm just like, all right, whatever. Just gonna let the trade run, let it do its thing. Ends up dropping some more. So now let's go back. Let's go back over here. I didn't even do anything. Cancel. So you see price is just consolidating and then boom, ends up hitting our TP. That's my mindset right there. As simple as that. Like, I'm like, okay, I'm in this trade. My stop loss is at break even. I've made money off of this. If my stop loss goes and gets hit, even though arbitrage is giving me these alerts, I'm okay with still being in the trade because I've made money off of it. Now, if you do want to be super like, oh, they take every single indicator the arbitrage gives, which is not a bad idea either, because I've seen people make money like that, then by all means. But like I said, with my technical analysis and with arbitrage putting it together, I'm pretty confident in my system. Therefore, I could be more uniform with it, no matter how many trades I take. This is just off of one trade though, and that's how I'm looking at it, just from one trade. I usually take anywhere between like setups like this. Like I take anywhere between like 15 to 20 of them per day or per week. That's like with arbitrage as the confluence, as just multiple confluences, you know? So that's with that's just one example with this pair. Let's go ahead and see what it looks like on the 1 hour time frame. So now, or let's go on the 4 hour, since again this is just off of one trade. And again, it was off of the M pattern. That you have your multiple confluences that make you get into these trades and you make money off of them. Because let's just say now, let's see how much I made total off of this move. So it was 73 pips. Once it got to here, then it was only a 0.30. So 73 and then a 0.30. So that's $3 for every, yeah, $3 for every 1 pip. So 3 times 73 equals 219. So you add that with $50,000 and 172. Boom. That's how much you just made. $391 risking 0.03% of your account. I'm taking that any day of the week. I'm taking that any day of the week because that's $391 that you didn't have in your account. And now you can go and risk a little bit more on a different trade, even if it's a risky trade like this. Because now what I'm looking for again is I want the breakout, the retest, and then continuation to the downside, right? So right now, I'm just gonna get this account size currently is $50,391. Right? So go ahead and delete all this stuff here now. I think I deleted a support by accident. Definitely did. Wanted this one right here. So I got that double top and price came back down here. Now I'm looking for price to break through, retest, and then continue to the downside. Let me see what arbitrage looks like though, because I could possibly find another opportunity. Let's go into the daily. What does the daily look like? Nope, nope, not there. Oh, hold on. I don't think I'm all synced up. This is at 4 o'clock. Yeah, I'm not synced. This is at 12. This is at 2. So, forward. Okay. I get this buy call right here, and this is at 8 o'clock. Depending on how it looks right here, I might not take that trade. But that all depends on what it looks like on this side. But again, my motive is to try to. I can't sell. And somebody's calling me, man. I have. Sorry. Okay, so this is on the 15th at 9 a.m. See, come over here. May 15th, 9 a.m. This was this candle right here. So this is on the very next day, actually. This is on the very next trading week, which is the 17th of May at 8 p.m. I'd have probably just finished my analysis, so I wouldn't even be looking at anything right now. So let's just go back over here real quick. And so now what I'm going to wait for is for this to play out. I want to see this play out before I look for any type of trade setups on AD CAD. So let's see what happens. So price ends up going bullish, comes back up. Okay. Off the rip, what I kind of want to see is if this is indeed gonna go bullish because it came to this support and respected it. That's why I said that I can't buy at I can't sell at support, or I can't buy at resistance. Now, what I want to see is a retracement of this type of sort, of price to come down here to the 71% and then keep going to the upside. The only way I won't get into this move is if price keeps going lower, or the only way that this move would be invalid is if price does end up coming down and then keeps dropping to my stop loss, or if it just keeps going bullish, right? So let's go ahead and match up arbitrage with this. This is on the, at what time? Did I walk? Yes, I did. This is at May 19th at 1 p.m. So you come over here, May 19th, 1 p.m. This is 17th, so I gotta move a little bit faster. I said it was at 1, if I'm not mistaken. Yeah, at 1 or at 2, sorry. So right around over here, right? Right over here. That's what I was looking for. I passed it by accident. So right around here at 1, I'm going to be looking at the 15-minute time frame because it's setting up on the hourly. On the 15-minute, I'm going to look at it and going to be like, okay, it's currently at this upper danger zone line right here. I'm not going to get in because it says that it's calling for a buy, and I don't want to try to get into a sell when it's calling for a buy on multiple time frames. So we have the 15-minute calling for a buy, 1 hour calling for a buy, 4 hours calling for a buy, daily is going to call for a buy. So I'm not getting into a sell until I get one of these to give me a sell signal, right? For risky traders, I'd be like, probably, hey, if you want, you can sell this. You can sell this right here, but you might want to put your stop loss at like up over here above this wick at 0.91259, or even higher at I can't even read that, 0.91350. That's why I would say that to put your stop loss if you're going to be a risky seller from this point right here. So I wouldn't get in. I'd wait until, and you see, stop losses would have gone hit because look where price ended up going. Ended up going to the upside. So that's how I be using arbitrage. I be using it to tell me when to get in and when to get out. I wanted this to happen. It never happened. I never got into the trade, and price ended up going to the upside. I never got into anything right there either. Daily time frame wise, let me get rid of all this stuff. Or no, hold on. Before I do that, daily time frame, I never got my hit down at this sell box. So with me not getting that, I'm like, okay, well, I can't trade this, and I can't buy at a resistance, like I mentioned, no matter what time frame. So this is scrapped, right? So now on the daily time frame, I'm not really seeing any setups, because if I can't see a setup on the daily time frame, I'm not going to trade something on the smaller time frame. That's just me personally. So let's see how this plays out. Okay, cool. So now that we've seen this I would have looked for a retracement. I didn't get the retracement. Price popped up. This would have been like something similar to what I had shown earlier. So let's go over here. This would have been a trade very similar to what I just showed. So me seeing this resistance right here on price, I'd be like, okay, price has been respecting this resistance for a while now, right? Well, and I see this impulsive move to the upside. What I would want to see is for price to come and retrace back down to the 61.8, which it kind of almost did, but it necessarily didn't get up there, and it hasn't even came back up to over here. So I'm still thinking, okay, this can drop, right? So I want to see price do some of this. I want to see price come down to 71% and then pop up, right? That's what I'm looking at to see. So gonna match up arbitrage with this time with 10th of June at 12. 10th of June at 12. Let me go to the daily. Gonna mark that up. Tenth of June, or this is July. So I'll just leave that right there. And let's go to the 15-minute time frame. And this is, again, this is why I would say that I wouldn't get into this trade until I get a sell alert. And even with the sell, this looks pretty ugly to me, so I probably wouldn't get in anyways. Just take a look at it. So price, it gives that sell right here. But again, I wouldn't get into that because look at the 1 hour time frame, what it looks like. It's just coming up right here. It could literally reject off of this and go bullish. Let's see what happens. Boom, respects it and does just like I mentioned. So that's why I'm like, it depends on how arbitrage is looking that I'll take a certain trade. If I don't like it, and even if I enter it risky, and if I don't like it, I'm gonna get out real quick and be like, all right, I'll just wait. So let's match up time. I don't know why I just don't go to the higher time frame and do it faster. Okay. I think I might have went a little too far. Let's see. So I'm at 8 o'clock on January 10th. Yeah, I did go a little too far. Oh no, I'm right where I'm supposed to be. Never mind. Let me go to over here. 15-minute time frame. So yeah, so I've got my rejections up here. I like that double top. Yeah, I'm definitely looking for the push to the downside to the 61.8. Let me actually draw my zone out. And then what time is this candle at? At 4 o'clock at 10? No. I most likely wouldn't be even looking for trades at that time. So now what I'm looking for, I have the setup ready. All I'm waiting for at this point is for price to start showing me that it wants to sell. So I might take a super risky buy right here, but I'm pretty sure my stop loss would be like 2 or 3 pips and then I'd get stopped out. So let's just say, for instance, I'm right here. I'm like, let's see if I can get a risky sell and I'll put my stop loss up there. Yep, got hit. And then boom. That's what I'm talking about. I knew that was going to happen. That's funny. So this 15-minute sell that I got right here at 10:45. Let's go over here and see what that looks like. Because that's when I would have been like, okay, I'm getting into this AED CAD sell. 10:45. Right here, right? I would have gotten into that sell. So let's just say from here. Then watch how this is gonna play out. This is gonna be funny. So I'm gonna be like right there. My stop loss is gonna be at 14 pips. Move that down there. Copy it. Then paste it onto here. And then use this to try to get my entry down over here. for my buy entry that I want to take to the upside. So I'm risking 14 pips to get 107. That's a 1-to-7 risk to reward ratio. But then look at this right here. So I'm let's just say same thing. I'm risking 0.03% because this is a retracement that I'm looking for, which I think price is already done. So my chance for this to even happen is pretty slim, right? So I'm gonna go ahead and how much was my account balance again over here? Forgot. I think it was like, or did I delete it? Let me see. I might have deleted it. Yeah, I deleted. But I think it was like 10,040 some or 50,360 something. I'm just gonna go ahead and say that. And so with this move here, I'm gonna be risking around, so risking 0.03%, and then it's with lot size of a standard. So let's just do 1.00. And it's going to be the same type of setup as I had. So I'm risking 150 pips of my capital, of my initial capital, because I'm just going to say my whole capital is 50,360. I forgot, like I said, I honestly forgot what it was. I'm just going to say 50,360. But I'm only looking at my initial capital as the number that I'm risking. I'm not talking about the profits that I've made. I'm talking about the initial capital. So I'm risking $150 to go ahead and risk to reward is 1-to-7. So I'm risking $150 to make 7 times that amount, right? Let's see what happens over here on the arbitrage side. Because I only look at arbitrage, and then if it tells me to get out, then I get out, and then if it tells me to stay in, then I go look at my naked charts. So forward with all this right here. Oh, I got stopped out, and it even told me to get out right after it stopped me out. So I've lost $150, but I'm still in profit from what I was trading. I'm still up. So if I lost 150. So that means it's 50,000 times 360 minus 150. That means that I still have $50,000 and I have $50,210 just off of risking that. And it was already a risky move. That's why I'm not trying to risk that much. If I look for my setups that have like it dropped, it made a high, then it retraces to my 71% or something like that, that's when I risk anywhere between 0.05 to 1%, maybe even 2%. But if I don't find that setup, then I'm only going to risk things like 0.03%, 0.02%, or anything like that, just to be like, okay, well, this is still a risky trade. I like how it looks, but I do know that the opportunity for this trade to my stop loss to get hit is more than likely rather than my other trades. So I'm going to cancel that. And again, even right here, you can see that price had very much nearly came to the 61.8. So it's still a likelihood that it don't even go over there, right? So let's see how price still handles up here, because I still think that this could potentially drop, but I need to see how it plays out first. So see how it ends up dropping regardless. So that's what I'm talking about. Even though my stop loss would have got hit, I'm pretty sure that if I would have kept, let's just go back over here. I still have my analysis, still thinking that this is still going to go bearish because it still is respecting up here. Then, see, I'll catch another sell opportunity right here. And then this is probably the sell opportunity that I wanted. not this one. And so what I would do is, with this sell right here, I'd want to get into the trade when it retests and then drops. If it doesn't do that, then I'll just wait for the 1 hour to do that. So let's go forward. Boom, I'm in the trade right here. My stop loss for arbitrage, it would usually be for like right over the RSI line, so I'll be risking like 11 pips on this move, but I'm just gonna go ahead and put it above these highs because again, I still feel like it's gonna go bearish, and then I'm gonna go ahead and risk, maybe I'll risk the same 150, and whatever lot size that has to be, then that's what it has to be. I'm still gonna risk the same 150 off of the same exact move, but I'm still gonna go for it, right? So copy this. I already know how it's going to play out because I've already seen it on over here. But I'm just going to go ahead and paste it right there. And again, same exact move, just a lower risk to reward. Now it's a 1 to 3 instead of a 1 to 7. And let's see how that plays out. Never got the call to get out. Boom. So right here, price has already moved how much in my direction? 30 pips. I was risking 27. My stop loss is at break even. I've taken 30% of the trade off the table. Or I've taken 30% of my profits off the table, right? Then let's go to the 1 hour time frame, see what that looks like. Oops. On arbitrage. So this still hasn't called. So this would definitely be a place where I would take my profits from, because the 1 hour even hasn't called for the sell even quite yet. So I'm still in this. If my stop loss gets hit at break even, oh well, I still made money off of this trade, right? So forward, boom, called for the sell right there. There's no reason for me to get out of this trade now at this point. And I actually need to trade. I need to copy this. So copy that for here, right? Risk rewards at break even. Oops, hold on. I need this because again, I'm looking at how much percentage I'm gaining from this trade. So I've measured how much I was losing on this. And so now connected to here, this would be my first take profit right there. Right? Then you put right there, this is your second take profit. Got hit nicely. So whatever you've already lost on that previous trade, whatever you've already lost, you've already made it back from this trade, and now you're going to make more from it. Because you're risking more pips on this, you're risking the same amount of money that you were losing on that trade, and now you've already taken double of what you were risking here. Does that make sense? So that's how that plays out. Stop losses at break even, of course. You've taken 70% of this trade, now you're letting the rest slide. Let's go see what the 4 hour looks like. The 4 hour is starting to give you the sell signal. It's starting to give you the sell signal. So now what I'm looking at is potential. Oh, okay, 4 hours giving me the signal. So I'm already in this trade and it's already at break even. So it's like I don't even have to worry about that trade anymore. It can go ahead, stop loss at break even if it wants. That's none of my business. I'll put a short position for this 4 hour move now. Right? I'll put it for this 4 hour move, but you guys are going to see what the gag is. Stop loss would be above here. Now with this trade, I'm risking 1% of my account. Or not 1%, I'm risking 0.05% of my account instead of 0.03. And let me copy and paste this. It's a 1.21 to 2.63, so it meets my criteria for a trade setup that I'll get into. And the reason why I said that this is a trade that I'm going to risk 0.05% instead of a 1% is because of this. See where I'm entering at? It's so far away from this support. Price can still come back up here and still hit this resistance and still end up dropping. So this is definitely a risk reward that I like, but it comes down all the way to the almost 100%. So most likely I'd be taking my majority of my profits, no matter if it's at 70 or if it's gone 2% from, or it's done 70% worth of my profit to take. I'm probably taking 70% in this box no matter what, because this is still the setup I'm looking for overall for the bullish AUD CAD, right? So let's go on to arbitrage. It's giving me that sell signal. I'm still in my previous sell, but I have another sell entry right here that I'm risking 5% of my account. So forward, boom. Let's see how much this is right here before I got stopped out at break even. So this is 60 pips from my entry to how much it dropped. That's 60 pips. I'm taking 30% of my profits off of this trade and moving my stop loss to break even. Even though it just got hit at break even, I'm still looking. I'm like, okay, this can still potentially go in my favor, because it did drop my 60 pips that I wanted. I took 30% from there, and it's still under this RSI line. So what I'm going to do, I'm just going to get back in it again. Same stop loss and same parameters, same 5%. I've made 30% profit from the previous trade. Let's see what happens again. Boom, price drops even lower. I can take another 30% off of there, and price is still under this RSI line. Okay, I've done that 2 times now. I'm not going to try it again, because now it's like, okay, price now wants to see if it's going to end up dropping or popping. So I'm going to go ahead and wait and see what it does from here. And boom. Even if it would have gave me this get out the trade, let's see how much it would have been. It would have told me to go out the trade right there, and I wouldn't have to have risked my full 60 pips. I would have just been risking 30 pips instead of 60, because the alert would have been like, oh, get out the trade, stop loss is going to hit. I mean, price is going to keep going up. And so that's how I look at the markets and how I trade, both using my confluence from arbitrage, my technical analysis, and then risk management is super important for me and my trading, for all those to be in line. If they're not, then I'm not going to make money in this market. So I hope this is a little bit understanding for those who take my trades, who look at my trades and my analysis and stuff like that, and see why I could be able to take a whole bunch of trades and not be over trading and stuff like that, right? So I hope this helps you guys. I'm gonna get the recording up. I'm gonna have to edit some parts because the Zoom was acting up. But thanks for those who tuned in live, and thanks for those who are watching. Please leave a like, subscribe, and catch y'all on the Sunday analysis.